Hello and welcome to this week's Trading the Trend on Wednesday the 19th of July. On the 5th of July we went short natural gas. As you can see here, we did so at around $2.77, and since then the price of natural gas has come off quite nicely. If you are still short natural gas though, what I would suggest you do is to move your stop loss level to break even, thereby having a free trade on, and in case you get stopped out you don't lose anything on this trade. And the reason for this is simply that we are currently heading back up again with regards to natural gas prices, but if we were to break through this June to July downtrend line, then the odds would be pretty high that we could actually retest the May high, and that was slightly above where we went short at. So that's the reason why you should perhaps move your stop loss back to break even. Last week's trade was to go short silver, and this trade went horribly wrong. As you can see here, we expected, or I expected, I should say, the price of silver to continue to fall, because after all, we were in a downtrend, we were trading below the downtrend line, and it looked as if we were heading back down again. But instead, what happened on the back of much weaker than expected US inflation data, the commodities such as silver rallied very strongly on the back of a weaker US dollar on that weaker inflation data. And basically that led to the price of silver rising very rapidly above our stop loss level, which was placed at $24.55 above the June high, and it thus stopped us out. And this is exactly why we never risk more than 2% of our capital on any given trade, because you won't get every trade right, and when they go wrong, what you want to do is make sure that you don't risk too much of your overall trading capital. So that trade got stopped out. And now I'd like to look at this week's Trading the Trend. And what I would like to do here is, again, trade with the trend. And as you can see, yes, we had a spike higher in June, but overall the trend is actually pointing down still. And what I would like to do is slightly higher levels, is to go short Chicago wheat, let's say at around $7.29, with a stop loss above the February high and a downside target around the $6 mark. So this week's Trading the Trend is to go short Chicago wheat at slightly higher prices, around $7.27, with a stop loss above the February high at $8.07 and a downside target at $6.07.